Welcome to the Weekly Spark, your fast 5-minute flash of insight into the world of mortgage and real estate. Every week, we're here to ignite your understanding of the market, from mortgage rates and housing trends to legislative updates and insider strategies. So let's strike the match and spark your week. This is the Weekly Spark.
Dang, we got a glow up, man.
Yeah, we do.
Welcome back to the Weekly Spark. This is the second week we're doing this, and we decided we need a pretty awesome intro for this quick and dirty of the housing market. So let's jump right into what we got this week and see where we're going. So Jason, this week we found that there was an act introduced. It's called the No Tax on Home Sales Act. I know you know a little bit about this. What does the act kind of cover, and what can we look forward to on the advantages of it?
Yeah, so I love this. So Georgia Congresswoman Marjorie Greene Taylor, she proposed this No Tax on Home Sales Act. So if you sell your primary home and you make $250,000 if you're single or $500,000 if you're married, you're stuck paying capital gains tax. This bill will eliminate that. I think it's a big deal for regular Americans, helping the middle class to keep their hard-earned equity and avoid that additional tax bill from Uncle Sam. It's not passed yet, but I hope it gets some traction and becomes law.
Yeah, that'd be great. I mean, ultimately, if we're living in our house longer than, a certain amount, short amount of time right now with the crazy appreciation number we've seen recently, it would be pretty rough to have to pay some tax on the house I already pay all the tax in the world on. So
that's right.
On the next thing, we got obviously hot topic all the way back from the election time frame and running with that. What's up with inflation right now? I've seen some numbers that are kind of conflicting. So tell me a little bit more about it.
Yeah, it can get a little conflicting and hard to understand, but the CPI report that came out yesterday, which is the Consumer Price Index, it rose 0.3% for the month, which was expected, but it put the year-over-year inflation at 2.7%. And that's up from 2.4%. That hurt the bond market. Rates took a hit yesterday. Now, it doesn't appear that there was any huge impact from the tariff deals. Car prices for new and used cars, they actually fell. Food costs didn't really change much. But then this morning, we got what's called the PPI report. So that's the Producer Price Index. And this is a measure of inflation from producers and manufacturers. So this number came in cooler than expected. The headline number was at 0%. So I guess to put it in perspective, last month, the number came in at 0.3%. So if you average out the last 2 months, you get a total of only 0.15%. And if you annualize that, we're sitting at less than 2% yearly inflation. So, I mean, hopefully the feds can see these numbers are good and consider cutting interest rates. And that'll help boost the economy, which ultimately will benefit consumers. It seems like they're the only ones who can't see these numbers, Ryan.
Yeah, they continually say that he wants to see, talking about Fed Powell, wanting to see the data support a rate cut. And arguably, those two numbers to me they reflect a rate cut. So hopefully we get that soon, and that would help out obviously with mortgage rates. So this week, we're going to kind of start something new than we did last week. And I really like this one because I know there's a lot of people out there that don't understand all of the loan products that are out there. So one of the ones that we use a ton at Creative First Mortgage is the DSCR loan. This is a loan that I think we've got 5 or 6 of them in the pipeline, maybe closing 2 or 3 this week. This can be a deal saver for your conventional deals. Like, this is a fantastic product. What's your favorite part about the DSCR loan?
Honestly, Ryan, these are becoming one of my favorite loan products. I mean, they're great because you don't have to provide income documents. The approval is based on the rental income of the property. It's great for realtors, real estate investors, and basically any self-employed folks out there that may not show enough net profits on their taxes after all their deductions. Some other good things is you can close in your LLC. You don't have a limit to the amount of properties financed with conventional you do. And rates are in line with your traditional 30-year conventional mortgage. So they're very competitive. They require minimal paperwork, and they're super easy to close.
Yeah, I love this as like I said, as a deal saver as well. So a lot of real estate agents will be in an investment property situation, and somebody miscalculates income, or the homeowner's insurance comes in higher, or the tax adjustment changes things. In Florida, that's a huge thing because we have that homestead opportunity. And it can really, really save a deal. As long as the rent covers the mortgage amount, generally you're going to be okay. And we even have some of those investors that are going to allow that to close, even if it doesn't cover the mortgage payment. And that's a possibility too. So super awesome loan program. Thanks for running through that with us. Thanks a lot, Jason. I think that's quick and clean this week. So we'll see you next week.
Take care, guys. That's a wrap for this week's edition of the Weekly Spark, brought to you by Creative First Mortgage. If you've got questions or want us to cover something next week, please let us know, shoot us a message, and until then, keep your deals moving and keep your week lit. See you next time.